Welcome in, guys. Welcome in. Friday Eve. What's going on, Matthew? Hola. What's going on, Corey? Evening. What a phenomenal day. Roofer's gone? Nah, not quite. Not quite. They came in a day early than I expected, so we'll see what ends up happening. What's going on, Sids? All right, welcome in, guys. Welcome in. We'll get started here. What's going on, Gaston? I think Spike pretty much spoiled your party today. But I'll give a quick little overview of what I'm pretty much expecting with Spy. I'll give you my watch list of what I'll probably be paying attention to with a few names. I want to say a little bit of a lower risk names more so. The other ones that seem a little more risky will likely be day trades. No, I think it's just you, Bear on Beach. You should be hearing me pretty fine right now. If anything, just let me know though. But welcome in everyone. Let's get started real quick so we can talk about uh, maybe what happened today. I think today caught everyone a little bit by surprise. I know that after yesterday's meltdown following FOMC, we expected further downside to break down below that 430 level. We just didn't get it. Appreciate that, Matthew. We didn't get that downside break that we expected in the follow through below that 430 on SPY, and instead we ended up getting a nice little bounce today. So they gapped us up pretty nicely. I knew that Apple was going to show us some strength early on. Given the fact that they had the earnings, we also see the results of the earnings. I'll get into Apple's chart as well. But I knew that Apple was going to end up having strength. If you caught me when I actually mentioned in premium, and I also tweeted out some actual levels and some tickers that I dropped on Twitter to whether I was bull or bear on it and what levels, I was actually interested in Microsoft. And the reason I was interested in Microsoft this morning was more so because I knew that one, Apple was going to end up holding us up if we did end up pretty much holding, as we did for most part of the morning. And then also because of the fact that Microsoft also had earnings, and before the earnings, they were sitting around this 300, 302 level. They still ended up being right around that level. Got a nice little pop, I think, to about 305, 306 range. And that's when I actually started pushing around the 306 range that I wanted to short it. And that opportunity ended up playing out because we had a $6 drop off of Microsoft. So that was a great trade today, I think, on my part, that I ended up looking for that. But mostly identifying where the relative strength was going to end up coming from, and knowing that Apple had their earnings this evening was knowing that either A, you could have ended up playing the momentum. Obviously, you would have gotten pretty early to end up catching that before it dropped with the overall market, or you would have ended up pretty much avoiding Apple entirely, knowing that it would have relative strength. And that's basically what I did. So looking at the other name in terms of Microsoft, if Microsoft ended up showing any kind of weakness, then we would see the market start to drag down, and that's exactly what I went after, was going after Microsoft. So that's basically what I looked at today for the most part. And then of course we also had Tesla. Tesla was bound to break down. I think I've been knocking the door on Tesla to break down. So it was a good sign of seeing Tesla under that 900 level. I think everyone that ended up playing their earnings pretty much got destroyed, and you hear me pretty much preaching. A, do not play earnings, and two, do not swing, because like we saw with the swings last night, if you ended up trying to get a continuation on the downside, you literally got destroyed because of the nice little gap up that we had. So be careful with that. I pretty much keep cautioning you guys, even though we understand it's a larger degree downtrend, you have to be very timely when you're actually swinging. And especially if you are going to swing, make sure you get further expiration. All right. But let's actually get into SPY here. Pretty much what I'm looking at more so is that I do think that we're going to get a bounce tomorrow. Obviously, we see that Apple's likely going to be the one to probably lead us in terms of big cap tech, and I'm going to look to see if there's any strength with earnings coming up into next week. We do have Amazon and Facebook that's more catching my attention, along with Google. So those are the three that I'm going to see if they pretty much are able to rally behind Apple's good earnings today. And what I'm expecting to see is a little bit of a higher low off of today's price action, and then we'll likely set up for a larger degree bear flag. So that's what I'm going to look for. We could probably range up towards about 438 if that be. Obviously, volatility is still elevated, so it's not unreasonable to see it pretty much move towards 438, especially if we see tech is actually going to be pushing. And that was actually one of the good signs today, is that I haven't seen in a while, is that despite the market pretty much declining, we saw some good relative strength across the board in big cap tech. And that was one of the things that I haven't seen in the past few days, and that actually catch my attention. So that's why I'm a little bit more convinced in the sense that we're going to make a little bit of a higher low off of today's price action, and we're going to end up seeing some nice movement going into next week before we end up breaking down from what you would call it as a larger degree bear flag. So short term, I'm a little bit bullish. I don't expect us to really flush. I don't think today was necessarily a moment of panic in which we expect more downside tomorrow. And then, of course, Apple, I think everyone feels like it's the golden child right now that will overall hold up the market. So that's what I'll be watching. Otherwise, if we end up breaking down, of course, you're watching below this 428 level. We have pretty much the low that we put in of 420.78. That's going to be the big level that you're watching. And then if the markets really want to flush us, we're still watching 415, 416 as overall target. Okay, so those are pretty much the key levels you're watching. The 428, probably want to take out this little zone that I have here below 428.86. The recent low here of 420.78, and then targeting 415, 416 if we do get a dump tomorrow. But if you see right here, pretty much a larger bear flag formation is what I'm looking at, in which we make higher lows, and then we'll see probably going into next week if Amazon, Facebook, and Google really have an impact in which the market's really going to roll right back over to the downside. So I don't think we end up getting the flush that we're all expecting. That's why I'm a little more skeptic. But as you see me and Avery pretty much doing is that we're playing it day by day. Okay, that's the biggest key right now is not trying to time the bottom and the top because as you see, you would have expected more downside today. We just didn't get it. So it's hard to time it from a day-to-day perspective. And so looking at the larger scale is trying to find out at what point we're going to end up rolling over and what may end up being the catalyst. All right. But other than that, SPY, next one I want to look at was Amazon. Of course, Amazon was one that actually held up today, and that's why I said it was kind of odd that the market was fading and we saw some relative strength in other names other than Apple today. And that brings me to looking at Amazon because they do have their earnings coming up next week. And what's going on here? So I'm looking at Amazon, see if we end up getting a nice little push. Now, I will say this looks like a bear pennant. And the reason why is because you have a flagpole going down. You have the bear pennant in which you expect to get equal length right down to the downside. And so that would end up completing that bear flag to the downside. Now, two things can either happen here. Either we end up chopping within this wedge, in which our range to the upside here is around 28.72, and to the downside here we're limited down towards about 27.73 or so. Now the other thing that I'm watching though is if we do end up getting a run up into the earnings going into next week, is that we do have a nice little gap, and that's more so what I'm targeting. A nice little short little gap fill here is what I'm looking at. We enter this gap over 30.1799, and that gap will complete at 30.2754. So I'll be looking to target this, but primarily if only if we end up breaking this resistance over the 28.72, 28.73. That's what I'll be looking to end up playing it at that point. Uh, so that's why I'm going to keep an eye on it. We could end up rejecting at that level, so that's what you want to be aware of tomorrow. But I am going to be looking to maybe possibly even day trade this one. So short-term target going into tomorrow is likely going to be 28.72, 28.73. But going into next week, you're looking at the larger gap fill is primarily what you're watching. All right. So I just wanted to bring that to your attention to keep an eye on that one. Of course, we're also watching Apple. I think everyone's watching Apple for the most part tomorrow. We'll see what the continuation is, or if we end up getting a fade like we've seen with maybe with Microsoft as well and Tesla. So they ended up having good earnings, but they ended up fading. So that's what I want to see if we end up fading or not. If you actually notice, I actually had this already charted out from when we ended up breaking down. But a key level here that we ended up having was 169.78. So 170 was pretty much a big level that we broke down from. So that's what I'll be watching is that 170 mark. And then if we get any kind of continuation, 171 is my overall target, is what I'll be looking at for Apple. So that'll be the number that I'm really watching. If we get over 171, then I think that's going to be pretty much with the market really just rallying. I don't expect to get past 171 on Apple, but that'll be what I'll be watching. Is that primary level is 171, maybe a level where I plan to maybe short. Not really sure just yet, but that's pretty much the short-term target that I'll be watching for tomorrow overall. All right. The other one that I'm watching is also Activision. I know that this one's pretty much been on back burner. I don't think anyone's really looked at Activision since that entire Microsoft deal was pretty much announced. But what I want to bring your attention was the nice little falling wedge action as it gets tighter and tighter. Now, I would expect this to end up breaking to the upside, in which you can target a nice little move towards about 82. Otherwise, if we can't get the break out on the resistance, then we're likely looking. My bad, guys. All right. So looking to see if we end up breaking the resistance. If we end up breaking the resistance, we'll likely see this trend towards 82. Otherwise, if we end up breaking down to the support, I'm looking at targeting down towards 77. In which case, you're going to see this end up breaking down even further below that 72 mark, just primarily because of the fact if you see how large this gap is. So our next level support that I had was right around the 74 mark. So I would keep an eye on that. Once you end up breaking 74, you're going to end up bleeding out straight towards 74. So that'll be something I keep an eye on to keep either the upside on watch or the downside. Play it either way. I'm not really looking to be biased in terms of one direction on it, but I'll be looking to play it. But the biggest factor that I pretty much want to point out is, as you see, this falling wedge action is closing in. So it looks like we're going to pick a direction here very soon. It may not be tomorrow particularly, but we may end up seeing it going into next week. So I'll keep a watch on that one. The other name I wanted to bring up was Pfizer, my good old friend Pfizer that I had on the newsletter from last week, if I'm not mistaken. I had it on the newsletter. But I pretty much like this little descending channel action that we have going on here. I'm going to look to see if we get a nice little pop action out of this. So if we're able to break this resistance level, I will likely get a small entry for a swing to go long on it. But if we don't end up getting that, then I will look to see the rejection. And then I'll see at that point if I do want to play the rejection. I think more so I want to play the upside on Pfizer than the downside. We already had the head and shoulders already play out per se, and we ended up getting the full breakdown. So I'll be looking more so to end up just playing the upside. If we break the resistance, I will get in. If we don't, then I'll leave it as is. All right. Other one that caught my attention, and this one caught my attention after hours here today, was Ford. Keep an eye on Ford. I actually like this one more so because we had this little ascending broadening wedge that we ended up gapping down and breaking from. We got the nice little retest, and now we should get continuation to the downside. So keep an eye on that one. What actually caught my attention more so was once I noticed we got the breakdown, we got the retest. If we do get the continuation, notice that gap fill that's down here. So we'll end up entering that gap fill here below 1672, but it doesn't complete until 1570. So keep that one on the watch. Let's see what it ends up doing because I do think that's going to end up being pretty much a banger, and we know that pretty much playing forward is usually cheap. So that's something to pretty much monitor, and we'll see how that ends up playing out. But I will look to see if once it drops below this 200 EMA here, I will definitely keep it on watch. So that'll be once we crack 19, we'll see this accelerate to the downside. All right. And here's my last bonus play. I was going to hold it back maybe for the newsletter because it is a little premature to actually see this one play out so quickly. But if you actually look at Penn Gaming, what actually caught my attention was the inverted head and shoulders action that we have. If you see, you have a nice little inverted left shoulder, you have a defined head, and now you're likely making a right shoulder. And so what actually coincides with that is that you have such a defined neckline. So I'll be watching for this one. It's a little bit early on it, so that's why I'm throwing it out there as pretty much maybe a lottery play out there. They do have earnings coming up next week as well. So we'll likely see this one start to trend towards the neckline. And then earnings will be the decision maker whether this ends up playing out to the upside off of the earnings or if it ends up getting rejected and back down to the downside. So I do like the risk reward at this point in time from this spot, in which you'll likely get a nice little push up towards about 44. You should be able to get about 44, 45 out of this. And then right into earnings, and we'll see if it ends up failing the pattern or if we get that beautiful breakout that we're likely looking for. All right. Liquidity on Penn. I haven't seen the liquidity. Granted, the fact they do have earnings coming up, I wouldn't be surprised to see the liquidity for next week be better than maybe for instead of playing like a 0 day tomorrow. So I would likely look for next week. Granted, the fact they have earnings, and you'll probably see some early earnings bets coming through, and that'll probably pick up the liquidities. So it might be something to keep an eye on. Yeah, gaming revenue should be good. I I don't know too much with Penn Gaming. I mean, we see what happens with DraftKings. It literally got obliterated pretty much. So I just more so like the pattern in play. I'm definitely not gonna end up playing that earnings. I don't think I will touch earnings more so, just because of the fact that we've seen how many earnings have actually played out, and it's actually just been Ivy Crush, especially. I would stay away. But I like to set up here in terms of risk reward, more so playing the earnings run up, basically. All right. So keep that one on watch, and we'll see how she ends up playing out. But that might end up being a nice little swing going into next week. I think this one is more so, I would say, a more safe bet if you are looking for a nice little swing play. All right. But that'll be nice for swings. I would prefer to get in the money in calls because obviously because of the price that it's actually trading at, and it's likely going to give you smaller moves. So in the money might end up paying out quite better. But of course, as Matthew pointed out, you definitely want to check liquidity on it. All right. But other than that, that's the watch list that I'm looking at for tomorrow. But as you see, most of them are pretty much low risk trades going into tomorrow as well. We'll keep an eye on the big cap tech names to see what they end up doing. Do we get a continuation of relative strength? No, aside from what the market action was today, I do want to see how Facebook and Amazon actually picks up. If we're going to see any kind of uptrend going right into their earnings next week, and that's what I'll be watching for. Let's see, one quick second. But yeah, so what I would do is pretty much just jot down some of these, add them to your watch list. I know that price action has not been as great for most of you. I know that it feels like we're kind of repetitive in terms of what names we're really looking at. So that's why I want to throw out some of these relatively low, cheap options in which you really want to pay attention to, other than trying to get in on action from like names like Tesla, Amazon. That's why I wanted to give you guys options in terms of lower, cheaper names. But if you're really looking for the safer bets, I think that names like Pfizer, like Penn Gaming going into their earnings are probably the most safest ones per se. Obviously, the Pfizer one, you do want to see it break the resistance on that descending channel action that I ended up showing you guys. But those are relatively cheap, and that's basically what I wanted to point out for you guys. Is you're really looking for cheaper names. Of course, you want less exposure during these volatile times because you do not want to be in a name like pretty much like Tesla, in which you're gonna end up either down $100 or up $100 the moment you buy during this market volatility. So keep those two names pretty much on watch. I would prefer pretty much Pfizer, Penn Gaming, and Ford would be your lower cheap options. And the Activision one is a little bit more skeptic in terms of we're waiting on the breakout in either direction. So that one may end up taking a little bit more time, but I like the fact that the wedge is actually closing in. That's what caught my attention because it's declined so much from when it ended up hitting its peak of 86.90. And so I do want to see end up where it's going to end up breaking out. If we do get a break of the resistance, then I don't mind end up playing that towards 82 mark. But if we get the breakdown, then obviously we see that entire gap fill that we have towards the downside here. So that'll be a nice little one that you end up getting in as well. I think the risk reward is definitely there. All right. That's my love Pfizer. I actually love trading Pfizer. I actually ended up making that trade from last week's newsletter play. That was pretty much a banger. The setup that I just pretty much caught today, looking at this little descending channel action, which just pretty much looks textbook. If we do get that break to the upside, I definitely will not hesitate to likely jump in and even swing a position on that. So the risk reward, I think, for most of the plays that I pretty much showed you tonight is pretty much there. Obviously, the Amazon one is a lot more volatile, but more so pretty much pointing out the gap fill that we have and leading right into the earnings next week is pretty much why I wanted to point that one out. All right. Other than that, though, we'll see what the market does tomorrow. I mean, again, I'm pretty much short-term bullish. I don't think we're gonna end up pretty much dropping, but what I'm really looking at is to pick up steam on Amazon. That's really the name that I'm watching more so tomorrow, honestly, is because I do want to see, granted the fact we have relative strength from a declining market today, I want to end up seeing if we can end up testing towards this resistance. We see it up after hours. I want to see a continuation off of this one. If we get the break and we hold over 28.27, that's going to be where I likely end up getting in on a 0 day trade. Obviously, this may end up being the only day that you're probably going to get the cheapest contracts on Amazon because we know how expensive that is. And you will likely end up getting 0 day because with earnings being next week, it's going to be highly expensive. So that'll be one that I end up getting in for my 0 day trade with earnings coming up and also continuation of relative strength with the declining market that we saw today. So that'll be one that I definitely watch tomorrow in terms of a 0 day trade, and then the continuation of Apple up to that mark of 171. Those are the two that are pretty much on my watch list in terms of what I'm going to play tomorrow and likely what's going to be my 0 day because I won't hesitate to get into Apple or Amazon for a 0 day tomorrow. So Apple to 171, and then we also get the break over 28.27 on Amazon, and I will be in there for a 0 day call in which we'll ride it right up to the resistance here of 28.73, 28.72, and we'll watch to see if it ends up breaking that pennant going into next week. Because I don't expect this bear pennant to play out per se, unless the market volatility really accelerates going into next week and we end up rejecting the resistance going into next week. I expect to break this and get a nice little run up at least towards this gap fill, to at least test it for next week. So just an insight going into next week. But short term tomorrow, looking at this one over 28.27, I'll play it right up to the resistance tomorrow, and that'll be our 0 day trade going into tomorrow, and that'll be an opportunity to take advantage of the cheapest contracts on such a volatile ticker. All right. But other than that, those are pretty much the ones that I'm watching. We'll see what the market picks up for us tomorrow. If we're able to hold pretty much the lows of today, that'll be very much key. Otherwise, we're looking again for levels 428, 420. Under that 420, then we're likely heading towards 415, 416 on SPY. All right. But I think that kind of wraps up our session tonight, guys. We'll see you guys tomorrow bright and early on live, and hopefully I don't have noise from the roofing guys, and I'll be able to be there pretty much guiding you guys there. Tesla, I pretty much had levels. I mean, I know that I'm pretty much been talking about Tesla for quite a while already, but the level I'm pretty much watching is taking out a low of 829 here. If we end up taking out the low of 829, then my next level that I'm watching is 808.42 on Tesla. All right, boss trades. That's pretty much the levels on Tesla. I know I'm pretty much always on Tesla. I think it's just the easiest ticker that I've found to be in and out so quickly, and it literally just pays instantly almost. All right. Just on my waiting for retest before getting in on these breakouts. Uh, Depends on which ticker per se. Would you say maybe an Apple? I would probably be a little bit more cautious, obviously because of the fact of how much it's up. The Pfizer one, I would likely won't hesitate, just knowing how cheap the premiums are, especially. I probably won't wait on that one too much. It depends on what the speed of the stock is, how much it's already up, what's the momentum behind it. So that sometimes you kind of have to play it by ear. If I do get in one of those lower end ones, I will watch for it. But ideally, in which you play it by the book more so, which I would play by the rules, is that yes, you want to end up waiting for the retest and then take your entry. So maybe if you end up getting the breakout tomorrow and you don't get the retest until Monday, maybe you get on those trades on Monday. All right. So if you want to play it safe like that, I would definitely advise you, Justin, pretty much to play it that way. But if it is something as cheap as maybe like a Pfizer or something like Ford, I won't mind it per se. But yeah, usually you want to pretty much end up waiting for the retest. I think that's what anyone would advise you. That's the safest way that you want to play it. All right, Justin. But I think that kind of wraps up. F Dog, appreciate it. But I will see you guys tomorrow morning, and hopefully we get some better trades tomorrow morning. We get some nice fluid movement, and we'll be able to make some nice little 0 day trades. All right, guys. Other than that, I will see you guys again tomorrow.